Ladies and gentlemen, thank you very much for joining us again on another exciting podcast. And we are delighted on behalf of Norman Rod, CEO of Petrol Auction and Sales, Craig Berman, to have Isaah Mhlanga here joining us, the chief economist for AlexForbes. And as we look to you for inspiration and ideas and possibilities, we're going to throw a few questions at you, Isaah. We're so delighted to have you join us.
No, thank you for having me. Hopefully we're going to have a fantastic discussion.
Well, I hope you got the answers for us, because, I mean, in an economy right now, which is, we all know, is challenged and there are potential possibilities in and around South Africa at this moment in time, I wanted to chat to you about the pressure points and where you feel that there's current constriction in this economy, and then, of course, talk to you about where the possibilities are. And I know Norman's got a whole myriad of questions for you. So where are we right now economically in South Africa, and what's the future?
Look, I think when we look at the South African economy, we always start from the global environment, because it has so much influence on what happens in the domestic economy.
Yes.
We have, geopolitics that's playing out. We know Russia is at war with Ukraine, the US also involved. So the way that we characterize it is that it's the war between the US and Russia happening in Ukraine.
Right, which we have an effect of. I mean, we're in an effect of.
We are feeling the effects through food price inflation, because they couldn't ship the grains out of Ukraine to many of the markets. And some markets in Africa particularly are impacted to a large extent because they import almost 100% of their wheat from Russia and Ukraine. Case in point, Egypt.
Right.
So they would have been impacted. But we also saw the impact on oil prices, which filters through into fuel prices. We saw record high, petrol prices locally. In part, it's because of those geopolitical concerns. So the developments offshore, they filter in a very direct way at a personal level in South Africa. And then we have the issues that are taking place in China, in Taiwan, and the US.
Yes.
That is a bubbling risk that we might see pop sometime in 2023 or beyond.
Right.
So we put that aside. And then we have Europe, which is essentially going into a winter of discontent, because it's going to be very cold. They don't have gas because Russia is closing the tap because of the sanctions. And that is going to have also a big influence on how South Africa fares up, because about a third of our trade is with the European Union. So expectations are that we're going to see a Europe that is in recession in 2023, which means it's going to reduce demand for some of the products that we sell into that region. So you have the US also expected to go into recession because of the increase in interest rate, which the US Federal Reserve, which is the central bank for the US, they have been hiking interest rates quite aggressively. And they don't seem to be stopping anytime soon, which means Europe is in recession, the US is in recession, and then China muddling through. Now, those are three big trading blocks with South Africa, which means the external environment is not that conducive.
I see.
That's where we start.
So, I mean, we're in the property game, as you know, and we're in the auction part of the property business, and Norman heads up the auction and sales division within the Petrol Property Group. And we're going out buoyantly to the market. I mean, we came off a great auction in the sense that we had unbelievable attendance. There was enormous interest, Norman. But how is this going to affect the property sector? Because at the end of the day, there are people that want to invest money.
No, absolutely.
And no one has ever said property is not a great investment, but it hasn't been up until now, and innovation is a key to that. How can we play this to develop great sentiment in the property game going forward?
The big issue is inflation and interest rates. As inflation rises, as it has been doing, and central bank increase interest rates, the cost of servicing debt for people that are going to finance those properties are going to go up. So that's where the pressure point is going to come from.
But prices have come down.
Prices have come
down. Am I right,
down.
Norman? I mean, you're seeing it.
Yeah, so what we've experienced over the last number of years is starting to come to the fore now with the gross overvalued properties making their way to the market, with the sellers' expectations trying to achieve what they believe the prices are the properties are worth, and what the valuers valued them at. But the buyers are nowhere near that level. And they've reset the valuations of properties. And as you just mentioned, the interest rates go up, properties start devaluing. I mean, they have to come down because of just the cost of funding.
Yeah.
And I think the people in South Africa, the property owners in South Africa, have still got a long way to go to realize that the assets of yesteryear do no longer exist. You know, I think property in itself, my own little interpretation, has been also a reason to create a bit of uncertainty within the retail sector, with the escalations every year, pushing them up. There's also a bit of contribution to inflation. But I think where we are right now is we're trying to get buyers to participate, which we have. You know, we had a very, very successful auction with a lot of participants. But the sellers' expectations are being misguided by their book values.
Yeah.
You know, and when you see multiple people buying or participating and bidding against each other for a particular property, you know that there's demand for that property at that level. And when the seller sits back and he says, you know, it's less than my book value, it's grossly less than my book value, those book values are actually irrelevant.
Yeah. So essentially, it's a buyer's market. That's how you would say, right? Because to a large extent, sellers have to reduce their prices to meet where the buyers expect the price to be, and it's quite simple to explain. Unemployment rates continue to go up, so the people that are going out to buy properties have also, it's not a lot. The impact of COVID as well, the work from home phenomenon, which means if you look in the commercial property space, office space also is no longer in need as much, because even in our company we have embraced a hybrid working model essentially. More than half of our employees work from home, which means we don't need as much space as we used to be. So it potentially much more widespread beyond our own company, which just reduces the demand for commercial property.
So let me ask you this question, Isaah. I mean, from an AlexForbes perspective, I mean, would you put property, is it out there at an all-time low to acquire? I mean, we go back to pricing, which kind of sets to the mid-90s certain pricing and corrections. Is it still an opportunity? Is property still part of the bandwidth of investment right now?
Look, we always try to diversify across different asset classes, and property does have a space in portfolios, as it has always been. It will continue to be. It's just a matter of which segment of the property market do you get exposure to. With the deglobalization that's taking place, and the need for security of inventory close to where you are selling, it might mean that warehousing, for instance, might do well, because all of a sudden we can't depend on shipments from China. It's too far, too many risks.
DCs and logistics.
Exactly. So bring that inventory closer by, which means you need to warehouse it. So that might do well. And as I said earlier on, if we look in terms of commercial property, office space, perhaps we might experience some pressure points there for some time until we get to a normal space where people know, are we working in the office or are we working from home, or it's a mix of both. So that will continue to be a pressure point for some time. But property in portfolios remain one of the asset classes. And in fact, when you look at the returns coming out of COVID, property was one of the best performing asset classes for some time.
Absolutely.
So it still holds a place in portfolios.
Okay, so let me ask you another question. I mean, we've got this unbelievable building in a precinct in Johannesburg. I think the replacement of this building leads to the hundreds and hundreds of millions of rands. It is in the banking sector. It is pristine. It is irreplaceable. The architecture, the build. I mean, who would be looking out for that today? Which type of investor would be looking out for that particular opportunity, which would sell, may I say, at a fraction of the replacement value? Who do you think out there in your landscape would be the potential investors?
If you look in the South African case, we know the issues of people working too far, staying too far from where they work. And what you're seeing is the conversion of what used to be office space to residential apartments, closer to workplaces.
Right.
So that's what you're likely to see with some of the buildings that are in the city center, the conversion. So it would be an investor that is looking to convert that into residential property and then lease it out to people. It's much more economical for a lot of people because
the
petrol
location.
prices are too high. The location also is close to work, conveniency. That's what we are likely to see.
Petrol going up or down?
It has been going up, but we obviously this week we saw a decline of just about 2 rand. We expect more declines going forward, but structurally the cost of transport will continue to go up. Cost of cars in terms of buying continue to go up. Because it's difficult to find all the chips that are used in the manufacturing process. So that means
there's a delayed effect as well. I mean, once the decision is made, it takes weeks and months to stop.
Absolutely.
Because interventions are put in. So the effect for us could be 6 months down the line. Interest rates, another rate hike on the cards?
Not just one, a couple of them.
Oh, really?
Yeah, absolutely.
Explain that, unpack that for us.
So essentially, we have inflation now at 7.8% in South Africa. There is normally a lag that we see of about 6 months from when global prices increase to how fast they filter through into South Africa. Europe has an energy crunch, as I said. And that's going to filter into a lot of the products we import as a country from Europe. You look at food price inflation also has been going up. It's a big chunk of the CPI basket, the consumer price index, which the South African Reserve Bank target. And they have signaled themselves to say inflation is out of the band, way too high compared to where they want it to be at 4.5%. Even if it starts to moderate, what then matters is how fast it's going to decline towards that target. And current expectations is it's going to take at least until the end of the first half of 2023.
Before we see some sort of stability.
Absolutely.
Norman, you're talking to buyers all the time. What's the sentiment from your desk?
Yeah, so obviously interest rates is a material factor in consideration when you're going to purchase a property. So if that is the case and interest rates are going to be going up, it's not going to be conducive to a lot of property deals being happening. So we actually need to try and find an alternative solution, or what makes the selling of properties more conducive,
attractive.
Attractive. So I want to ask you, the government's got a role to play. There's a property tax. They are based on the old valuations. Property values have come down drastically. You could take a building that was worth 250 million, you could battle to get 50 million rand today. They need to be involved in our economy. So while interest rates will be going up, I think the property taxes should be coming down. Your view on that?
Look, you're absolutely right. They need to be involved, but I think if you look from a government perspective, they have also a need to generate tax revenue. So I would say they will not be inclined to revalue properties for the purpose of finding new tax where taxes should be. You have seen, even in terms of the tariffs across the board, water, electricity, that they're just going up. They use all those tariffs to boost their tax revenues, because the traditional way of generating tax revenues is not performing as well. So we are unlikely to get help there from government. But I agree with you, they should be revaluing properties more often to reflect the underlying value of the property market.
Yeah, because the investors looking to invest, buy property and invest. When they do so, they stimulate the economy.
Absolutely.
They put more money into the economy. When you get, we're looking to get foreign investment into this country to also stimulate the economy, to boost the economy so that there's more people that are employed, more businesses happening, properties are being redeveloped, built, re-engineered, whatever it is. Or we haven't seen any really new developments going on besides possibly here and there in the Cape Town area. Everything's been put on hold. Property prices for redevelopment are going through the roof, obviously, because of inflation. And the spread between existing properties and new developments is now massive. So we're trying to work out what is the next involvement with government or to try and actually get foreign investment, because if there's not a good conducive platform to which to invest and trade and be involved in, property is a massive factor in the economy.
It's an anchor.
What are we going to do?
Look, the property market is always a leading indicator of the overall economy. If the property market is doing well, the overall economy tends to also do well. So we need to see the economy growing in such a way that it can create jobs. People can get employed, and when people get employed, they buy property. So we need the economic reforms that are currently underway to be implemented much more aggressively. We need safety and security to be a top priority, because it becomes quite difficult for foreign investors who are looking at South Africa in relative terms to other emerging markets to say, where do I put my money? And if a country is not safe and secure, it becomes difficult for foreign investors. So that safety and security is a key issue for us, which we need government to be much more firm. I was in Belgium a week ago. Quite amazing. People can just walk at night at 12, with their phones, and nothing happens to them. That safety you feel is what attracts you to invest in a particular country. So we need something similar in South Africa.
May I, as well as the cost of investing.
Yeah.
So right now, South Africa is very cheap. I think the rand, I'm not sure which way it's going to go, if it's going to devalue or strengthen, but it's very cheap. Where do you think the rand should be against the foreign currencies, against the dollar? Where's the parity?
So there is a long-term valuation, and obviously there are deviations around it. Given how the global environment is currently, you look at South Africa's inflation is lower than US inflation, lower than Europe's inflation, for the first time in so many years, where you have South Africa's inflation lower than advanced economies, which means that should drive the local currency stronger, right, in relative terms. So you would expect, if you look at long-term valuations, it should be around between 13 and 15. That's where it should be. But because the US Fed is currently hiking interest rate aggressively, you have a risk of trade where we are seeing outflows of capital from emerging markets, not just South Africa, emerging markets broadly, because money is flowing into a safe haven US dollar market. That's why we're seeing depreciation towards 17 and just above 17 as of this morning. But fundamentally, over the medium term, the currency should strengthen.
In our environment, we're all optimistic. We wouldn't be sitting here if we weren't optimistic. Why are you, as a chief economist, optimistic? You come to your desk every morning in some shape or form. Why are you still positive? And I can feel you're positive. Tell us.
Look, I think we are getting some convergence between the private sector, government, civil society,
yes,
to say the path of travel that we have been over the last decade was disastrous.
Yes.
And we need to turn around that path. We are on a positive trajectory from a reform perspective. We now have the electricity sector that has been opened up to the private sector, which can add more energy to the grid. and reduce the load shedding that we currently experience on a daily basis, and that should start to anchor confidence from the business community, from investors, as we get more energy onto the stream. You look into the transport sector as well. We are seeing the private sector being invited to take a part on ports, railway lines. That is very positive, because these are sectors that have been dominated by the public sector or by government, which it has mismanaged for much of the last decade. Now the private sector is being told, come, partake, invest, and make the returns out of it. And therein lies the efficiencies that we see in the private sector being introduced in key network industries that should be able to unlock economic growth. That, for me, is something that we should be viewing in a positive light. Yes, the speed remains quite slow, but the direction is in the positive direction.
In the next 3 years, where do you believe we'll be? Just looking into the crystal ball, in as far as the economy is concerned, in as far as sentiment in reference to what Norman is referencing.
So 2023 likely to be difficult.
Yeah.
Because of the recession in US and Europe. But beyond that, we are likely to see a stabilization, because policymakers globally are no longer tolerating economies that continue to underperform. Because as we have seen in the likes of Sri Lanka, the president fled there because they mismanaged the economy, the population revolted. We saw in the UK, Boris Johnson resigned because of the mismanagement of the economy. And we also have quite a long history in different countries, in Egypt, in Tunisia, where the underperformance of economies have led governments to be toppled. I think there's that understanding. So come 2023, we reach rock bottom in terms of recession in Europe and the US. Policymakers are going to turn around and start to stimulate economies to avoid more pressure that will be coming from their populations. Hence, I would expect 2024 for things to start to improve. But also locally, that's when we expect our economic reforms to start showing up in terms of economic growth to improve.
So this is not a political debate, but I think politics has a role to play, obviously policymakers. And so we're looking as the private sector to get government integration and involved. And I think they've got it wrong, and I think we're looking forward to some brave young politicians to come through the ranks that see the possibilities and potential of our country and see what we have to offer, and will make this an attractive environment for foreign investment to flow. So I'm very positive. I mean, I've seen that at the last auction, the number of buyers that were there is really to put their money where their mouth is and participate and to make an offer. We really are looking for an upward trend from a real terrible cycle that we've had in property with the valuations of property and things. But property gives you a return. You rent it out, you get a return, and the REITs, they distribute the dividends to their shareholders, and there's still a very good conducive platform to invest in property as long as the fundamentals are right. So we're looking forward to this growth, hopefully with government participation. Hopefully they'll have a better outlook to make this environment a good one to be able to trade in. Your view on properties and the investment in properties for the next year or two, taking into consideration what we've just come through. I'd like to hear that.
Look, firstly, let me perhaps touch on the first point you mentioned on politics. It is a contributor to the stability of the country, to the extent that it determines economic policy. It matters a lot. And I think businesses or the private sector can no longer stay on the sidelines of actually saying to government, we're not happy with these policies, we would be happy with a different set of policies. And if those policies are to be implemented, we'll be able to commit certain actions that can improve economic growth. So I think we need those discussions between the public sector and the private sector. Over the last decade, to a large extent, the private sector has stood on the sidelines. That's why we ended up with so much corruption for a decade. And right at the end, we had, movements like Save SA. Where were they when all this corruption was taking place? So we need much more vocal private sector when things are done right. When they are not being done right, because that creates a positive environment or conducive environment for investment to take place. As far as property is concerned, I think, it's a difficult environment, particularly for 2023, because growth expectations are weaker than this year. We have between about 1.5 to 2% over the next 3 years, not taking into account the economic reforms underway, because we have learned, historically, you don't upgrade forecasts on the basis of announcements. You upgrade forecasts on the basis of implementation. So as we see implementation, there is an upside risk to those growth forecasts. But without taking into account the reforms, growth is between 1.5 and 2%. That's 2023. 2024, we believe more reforms will be coming to the stream. Our energy constraint will be lifted because the private sector's investments into renewable energy is going to continue, and that's going to provide, or to remove the binding constraint on energy. So that generally improves the overall macro environment that should show up in the property market. As people get more employed, incomes increase, people tend to buy more property. But we can also see the rural-urban migration. It continues to take place, which means there will be more people that requires places to stay. And that, of course, will just enlarge the demand for property.
Isaah Mhlanga, thank you very much for joining us. Your insight and your take has been invaluable. Norman Rod, thank you for joining us equally, and it was a privilege and pleasure having you at the round table.
Thank you very much. Pleasure to have this discussion with you.
Thank you, sir.
Thank you.
Thank you, ladies and gentlemen.